market news now. Asian stocks advanced at the start of a week packed with major central bank policy decisions, with Chinese equities lagging as traders hold out for signs of more policy support. Earnings and central bank decisions will be in focus this week. Traders are positioning for the Fed and the European Central Bank to raise interest rates and to signal whether more hikes are likely. Meanwhile, Anglo American Platinum posted a 71% decline in half-year profit due to weaker platinum group metals and lower production. The miner, valued at about 239.2 billion rand on the JSE, declared a final dividend of 3.2 billion rand, and that equates to about 12 rand per share, which is down from 41 rand that was declared for the first half of last year. For more market analysis, we are joined by Gary Boyson, who is a portfolio manager at Rand Swiss. Gary, thank you so much for your time. Given this backdrop here, where I guess on the Chinese side, we're still kind of looking for more constructive policy support to support the economy, what's your sense of market sentiment right now when you look at what's going on from a European trading perspective, and as well as US futures?
So we have the European markets down slightly. So we're actually bucking the trend in South Africa. You know, our top 40 is up about 0.25%, with the FINI really leading the gains. The resource index is more or less flat. Industrials up about also a quarter. So we're definitely bucking that. We've got the FTSE down in negative territory. You got the CAC 40 also down, just following that Hang Seng market a little bit weaker. But if you look at market sentiment in general, if you just take a little bit of a step back, you can see that it is very, very optimistic out there. You've got, if you look at something like the volatility index, the VIX, that's sitting at 15. We're getting back into the kind of 12 to 15 range that we saw pre-pandemic. If you look at something like the put-call ratio, that's below 1. That's another measure of just like what the sentiment is in the market. And if there's a wonderful composite index that they call the fear gauge, and that's sitting at extreme greed at the moment. So yes, we're having a down day, but the market sentiment I think is fairly optimistic in general.
So I mentioned in my intro that we had results coming out of Anglo American Platinum. What was your sense of the numbers that they put forward?
I think it's been a difficult environment for them to operate on, and they were fairly optimistic. If you look at their production guidance going forward, they're still expecting 3.6 million to 4 million ounces for the full year. They only managed to deliver 1.7 million ounces in the first half, so expecting a better second half. And part of this is the challenges that we understand already. They're in a massive draw of electricity through their concentrators and smelters, and obviously Eskom problems affect the company directly. So that's the one hand, that it is difficult for them to produce, and we saw their production fall in just over 13%. But at the same time, we've seen the decline in the PGM basket prices. So these are big international commodity prices. So we've got a fairly good sense of where rhodium's going, where palladium's going, and where platinum's going. So in dollar terms, the basket price was down around 30%, which is significant. It's a big drop for the company, and obviously that feeding into their numbers as well. So I think making the best of a bad situation, and of course shareholders are going to feel that. So dividend per share was cut from around 81 rand per share down to around 12 rand per share in this reporting period. So being a little bit more conservative, but that's on the back of the fall in earnings.
Given that precipitous fall in PGM prices that you've just alluded to, and then you add in this electricity component, is there something to be said about how the share price of Amplats has been trading along with its peers here?
Well, the platinum prices, at least of the platinum counters, are down significantly for the year, and they really are tracking the underlying commodity prices. So investors looking at these kind of counters, they have to realize they're exposed to very, very volatile commodity prices. And in the presentation today, Amplats was fairly optimistic that we might see a little bit of short-term relief just as the PGM market comes back into balance. And you get the sense that some of these mining companies have been a little bit more conservative with their capex. They haven't looked at the kind of boom times that we saw in the last couple of years and really doubled down on new production. And I think that's been a smart move. So hopefully we see a little bit of a recovery in share prices if we do so pick up in metal prices.
It's going to be a busy week this week. We've got the Fed meeting on Wednesday, the ECB on Thursday, as well as the Bank of Japan on Friday. When you look ahead as we continue with the second half, how much of a factor will central banks be for financial markets?
I suppose they're half of the story this week. So the other half is going to be the US earnings season. But central banks are absolutely key. So it's if anyone does anything unexpected, that's where we're going to see the impact in financial markets. Because largely, if you look at federal funds futures, we're pricing a 99.8% chance that the Fed lifts interest rates by another 0.25%, so 25 basis points. And that as inflation has been moderating, we're still a little bit concerned. I think markets are a little bit concerned. The Fed is a little bit concerned around that core inflation figure that came in at 4.8. But we are starting to see the labor market responding. So many people are saying this is going to be the last hike of 10 consecutive hikes. So 10 hikes so far, and this potentially will be the last one. The ECB is also penciled in. There's a 99% chance that the ECB will be also hiking by 25 basis points. So the core inflation across the Eurozone is sitting at around 5.4%, so a little bit higher than the US. And the Fed obviously didn't pause as the Fed did at the last meeting. So they hiked by 25 basis points. But overwhelmingly, we expect them to hike again this week. Japan in a little bit of a different situation, but they've got a yield curve control policy. We're not expecting any changes there. You will see that coming in the end. But if any of these deviate, and if anything strange happens today, big impacts on the markets, because there's a certainty of what's going to happen this week.